Okay, so thank you so much for staying with us. The program is still business this week. My name is Dennis Ofik. So I still need to introduce myself. I've got my guest already seated, an educationist who is also a financial commentator. I've also got a financial commentator in his own right as well. I will start off with Majekodunmi Benjamin. Good afternoon.
Good afternoon. Thank you for having me.
Welcome. And Daniel Wabuma.
Yes, of course.
That's the educationist and financial commentator.
It's a pleasure to be here, Dennis Ofik.
We really appreciate you for making our time to join us on the program this afternoon. Now, let's start off with Mr. Majekodunmi. Now, what's been trending now is the fact that it seems a lot of persons are embracing financial technology and all of that. I mean, online banking seems to be the in thing now. But then there are those who believe that there could be a behind-the-scene tender war between the deposit money banks, the commercial banks now, and then, of course, the fintech. Let's start off first. What can we attribute to the changes that we have seen in the financial sector?
Okay, thank you so much. I think it's important to first admit that the history of civilization, development in all ramifications, is an history of antagonism. Oh. You know, a new reality antagonizes the existing reality to give birth to a new reality. So I say that to mean the banking system has been existing for a long time, and now it is in the nature of human to create an innovative replication of what has been in existence. Okay. Because human creative mind, they strive to ensure that they make technologies or they make discovery that becomes that make banking or financial system easy for people. Okay. So it's the advent of technology. People are introducing different form of technology to make life easy for them. I'm sure that's what has led to these several digital loan banking systems we've been seeing. So I think it's something to applaud. Because any society that stands against innovation is standing against its own development. So,
Mr. Daniel, Mr. Majekodunmi has been able to help us. I mean, let's lay a foundation now.
Yeah.
Someone is wondering now, fintech and the traditional banking system. This one gives money, the other one gives money. This can give loans, this can give loan. How do we distinguish them?
Okay, first of all, we need to understand there's a popular saying where a lot of people say, see the need, take the lead. Okay. And so innovation is a critical aspect of human development. And so we believe that the fintech startups that we have now coming up are critically helping us meet the demand of access. Okay. And so it hasn't actually stopped the traditional banks from, taking those responsibilities that they do take. Okay. For example, when it comes to banking, there are two primary, categories of banking that even the fintechs need to learn from the traditional banks, and that is credit and treasury management. You see, this is one area that the traditional bank is so vast, and the fintech companies are trying to, fit into this area. So, though the fintech companies are innovative and they are developing, evolving, but the traditional banks still have their place as far as, this whole banking thing is concerned. What they are trying to do here is that the fintech is coming on board to tell us that those that are unbanked and underbanked deserve access to transactions, processing payment, faster processing. So what we're seeing in this system now is that they are trying to tell us that we want to give you, a better customer experience, a user-friendly interface, just like that. Yeah. And also while serving the purpose of payment processing. But the traditional banks still have all the back end as far as banking is concerned. Okay. It's an integration for both of them. There's no one coming to outshine the other.
Mr. Majekodunmi, I mean, he made mention of some critical areas that the traditional banking system still have an edge. If I'm to say still have an edge over the fintechs themselves. I don't know. What do you think could be the challenge for the fintechs if they were to venture into such areas? For example, treasury bills management.
Okay, fine. Like I said earlier, innovation takes a lot of confidence buildage to make it stand.
Yeah.
The fintech, those with who use financial technology for financial administration.
Yeah.
They still have a major role to play. Okay. And they have a lot of learning to be done in order for them to be able to be accepted social-wise. In terms of treasury management, yes, fine. The legacy banking system, the traditional banking system, has been a very strong hold in controlling resources within that jurisdiction. So the fintechs also have to submit themselves to authorities' regulation in order to ensure that they can get confidence from the people. For instance, recently we are aware of the position of the federal government in collaboration with Google, trying to ensure that a regulatory basis is being established. So if the fintechs are not establishing regulatory activities, they may not be able to survive within that terrain. So they should be able to subject themselves to regulatory disposition.
Okay, we're about to take a short break, but just before that break, I would love to ask Daniel this question, and it's something that has to do with whether there's been a disruption. I mean, you talked about evolution, right? How the systems have evolved over the years, and I don't know. It seems that is there already a disruption that we are seeing? It seems the fintechs, have they caused any disruption in your own view?
Of course, there's definitely going to be disruption, but it's all for positivity.
You think so?
Yes, of course.
You think the traditional banks, they told the same line of thought?
This just makes the pile bigger.
Okay.
Yes.
Okay.
The sky is too wide for everyone to fly. You know, this innovation is a digitized banking system. Now fintech is trying to come on board to, make that common fisherman out there to have access to credit, to have, prompt access to payment. So we know the traditional banks have their own challenges, which is as a result of the unfriendly regulations, that actually slow the pace of their activities and their operations. But then the fintech is coming from an innovative platform, and lest you forget, fintech firms are actually integrations of, numerous organizations coming together to, put technology at the center. So for me, it's not like the fintech companies are coming to cannibalize, the traditional banks. That's far from it. It's just try to put a position where everyone has to step up. For example, let me come in with an example.
Okay.
We see agency banking all over now.
Yes.
For example, I could tell you it's so difficult for a branch manager to service an ATM point because the cost of servicing the ATM and all that can be that difficult. But we've seen over time, a lot of these digital banks putting up agents out there, bringing up POS services to the doorstep of even an average person on the street. And so if the bank decides to adopt same policy, adopt same strategy, bring out, agents, we can have a bank, for example, I don't want to mention a name, coming out, putting up their POS out there, having agents distribute this cash, you will discover that there's much cash flow for the bank and profit for the bank than just keeping the funds in the ATM, because you now have more persons doing what? Distribution. And in that light, both institutions have infrastructure deficiencies. Okay. Yes, I believe we'll talk more about that.
Yes, we will talk more about that. That will be after now. We'll have a quick break. We'll be back, and then we'll also shift attention to the new policy coming through from Google. Still on this same subject matter. Please stay with us. All right, thank you so much for staying with us. Remember, we're live in Benin City. This is Independent Television. The program has been Business This Week. And my guests, they've been helping us to do justice to what we've been focusing on. That's Fintechs, more or less like a competition now, even though they are making their point, and the point seems to be diplomatic, sort of. They don't want to agree whether there is competition somewhere or not. Okay, so Fintechs and the banks, where does their customer loyalty, where will it lie? Basically, that's what we'll be looking at. And once our guests have been able to make their points, we'll quickly shift attention to the second area that we're also focusing on this afternoon, which is also still in the areas where the fintechs are also operating. Google, last weekend, they brought in a new policy, all right, restricting loan apps from accessing photos and contacts of users. And it will come into effect on May 31. We'll also look at the implication of that policy as well. So quickly, Mr. Daniel, help us complete the point we were trying to make earlier as to how it concerns whether the system has been disrupted.
Yeah, talking about disruption, there's a disruption already.
Okay.
But then every disruption comes with its own challenges. Okay. The fintech coming up with innovative ideas doesn't mean they don't have their own challenges. Okay. One of the major challenges that the banking sector, the local banking sector is facing is that of infrastructure. And it's the more reason why we have investors, going deeply into investing in fintechs, because investing in digital infrastructure is quite cheaper than investing in physical infrastructure. And so we begin to see more attention going towards that area. Okay. And beyond that, when we talk about fintechs, we should also bring into the context of embedding financing. For example, we have organizations that are non-banks. For example, Uber. For example, you walk into a store and you want to get something. They give you a loyalty card to be. What does that mean? It means it's not a banking, a licensed banking institution, but it gives you the opportunity to access banking services. For example, you have a boat and you have this boat.
Thank you for all of the adverts.
Yeah, boat, app which gives you, kind of a portal where you can have some money inside to pay for your services whenever you need to do it. Yeah. That also serves as a bank.
True.
Of course. So you see, the disruption comes across all spheres. It's just giving people access and user-friendly services. Okay. Or I can tag that to be behavioral design. Okay. Designing, innovations to suit the behavior or the current trend of what people want. And that is what we're seeing in today's world.
Okay, now the fintech ecosystem in Nigeria, is receiving a lot of funding.
Yes.
And a lot of persons are diving into that area. Why are investors running there, Mr. Benjamin?
Okay, the truth is, regardless how diplomatic we want to sound, major customers, majority of customers have lost interest or have lost confidence in the traditional banking system. Okay, briefly, in 2010, we remember what happened when the banking sector, the Nigerian banking industry was at the verge of collapse because some CEOs of the banks had siphoned, they've embezzled the funds that belongs to depositors and investors. So it took the then CBN governor, Mr. Lamido Sanusi, to bail out those banks. So there was a merger, some bank died, some other persons bought the bank. So the investors and customers are becoming to realize that the money they put in the banks are used by the legacy banks to invest in stock market, to invest in different activities. And when they make erroneous investment, then it affects them. Then it depends on government to bail them out. So people are looking for an alternative where they will have direct access and direct control to their funds. And that is what has been creating all of these reactions. It's a chain reaction. If you beat a child, you cannot stop the child from crying. So that is what has been leading to these different financial, this tech wizards creating up tech infrastructure for finance. For instance, when the Ukraine-Russia crisis, I know we're talking about Nigeria, but I'm just trying to bring an input. When the Russian-Ukraine crisis started,
yes,
a Ukrainian trying to leave Ukraine to save himself, he said he couldn't take the house he had. He couldn't take all the physical property he had. The only thing he was able to run away with to save his life is 2 Bitcoin and some Ethereum he has. All those are financial, they are digital assets. They are also means of financial transaction. So assuming there is no such, he couldn't have taken his money in the Ukrainian bank and run away with the money. So you can see how that financial, technological, financial infrastructure saved him and helped him save some of that property. And also, you also agree that it takes a lot of money to receive. For instance, let me use myself as an example. Yeah. When I make some of my services for foreign clients, it takes Western Union to get the money back, and you can't get it very immediately when the money is missing. You have to wait for some days before you get your funds, and even the percentage that is taken from me from the bank is outrageous. So someone advised that I should use a digital currency, for an example, which I did. When the money was sent, it didn't even the charge that was the fee that was paid for it wasn't even up to $1.
Just $1.
It wasn't even up to $1 to send it down. And even when I made the conversion, unlike the banks will tell you, they give you the bank rate and all of that, the amounts are $1. So all of those.
But are you? I mean, Daniel. I mean, you are concurring to all he's been saying.
Of course.
Are you guys not being unfair to the traditional banks if you say they charge you so much, knowing the kind of terrain that they're operating?
Okay, now that is where the disruption comes in. We've seen the Fintechs, the digital banks, coming to tell you for the first 5 transactions, you're going to have a free...
In fact, some will tell you 20.
You get the point. So you begin to ask yourself, where does the customer loyalty, come to play? But that doesn't take the fact that, the traditional banks already have existing customers who necessarily are not interested in the number of transaction fees, because these are big guys and big players in the industry, So these guys are just coming up. And so they are not after necessarily the big guys, but they are after those market women in the street, the fisherman, the pepper seller, who runs a day-to-day business activity and needs a platform to have, easy access of funding. And so it's for me, it's a different, it's a different system meeting different needs. And that is what it is. We talk about decentralized finance, which is also making waves. You see it's a problem, even receiving money from the Western world because of certain regulations, most especially as it affects Nigeria as a country based on our economy and everything. But then we see decentralized, finance also coming to play to help us make, sending and receiving funds very easy. Though it has its own regulations and all that, but then it's kind of giving us prospects that in time to come, we're going to be having sending and receiving of funds as easy as possible.
Thank you so much. Yes, you want to add something here?
Yes, you see, the way an institution presents itself will determine what relevance or respect such institution, can receive. Okay. For instance, we remember recently the currency crisis that happened when the CBN governor was saying they needed to change the currency and bring some inside currency. So Nigerians had to bear the brunt. But then this is the same when the chaos, the policy led to chaos, different destruction, the CBN governor came out, people were saying the banks don't even have money, the new currency to give to us. Then the CBN governor said the mint has exhausted its capacity, that they need to go to a different country, Germany and the rest, to bring the new mint for new currency. I think policies or decisions like that, strategies like that, does not put the legacy banking system at the upper edge. It therefore presupposes that there is a need for an alternative that will be more responsive to the yearnings and demands of the Nigerian people.
So if everyone rush to the alternative, what happens to the traditional banking system?
That is the history of humanity, and an empire rises and another empire falls. When an empire rises, the other one falls. So if the banking system, the legacy banking system, want to remain relevant, then they need to stand up to that responsibility. You either stand to the reality of today, or you become swept off.
So adding to that, if we look at the current trend now,
yes,
we discover that the legacy banking system is actually, forming alliance integrations with most of these fintech companies. Sometimes you want to make transfer through Paystack, you have to use a banking app to be able to do the transaction and all of that. And it's so fast, even though you're using a banking app to make such payments. So you see, that's a kind of synergy coming in place. And not to say, the fintech companies cannot, I repeat, cannot displace the legacy banking or the traditional banking system. Banking. Of course, there's this popular saying that we all need banking, but we don't need banks. So, but then we should understand that the legacy banking system is at the back end of whatever transaction or whatever activity or operations that goes even within the fintech, the customers, and the users. So I just feel that only the banking, the banks who practically cannot meet up to this new change would rather fall off the track. But for me, I believe it's more of an improvement of a new system or an existing system.
Like this topic is becoming inexhaustible. Now, but just like the points you made earlier, I mean, taking us way back as to how some banks fell off by the wayside as a result of their inability to meet up with capitalization as brought forward by the government. Yeah. Do we also see, or are we looking forward to a situation where some fintechs also possibly are going to fall by the wayside? Some will stand the test of time. Would that happen, just like it happened to the legacy banks?
Well, they will always be the bad guys. Yes, in every situation, you either play it right or you play it wrongly. So those who play it right, they stand the test of time. Those who play it wrongly, in 2010, when Oceanic Bank and the rest, when they fell off, there were other banks that stood the test of time. Some banks even bought them. So those are banks that were playing their game well. So yeah, fine. The fintechs are solving a major problem, no doubt. They need to be encouraged because creativity is not supposed to be. We are not supposed to stand as an obstacle against creativity if we want our society to be developed. But then they also need. That was why earlier on I made mention about subjecting themselves to regulation. In order for them, in order for the people, the only way we can get the confidence of this banking system, either legacy or fintech, is for them to subject themselves to regulation so we can have that trust. And also the government should not use that as an opportunity to create a safe haven for their friends within a legacy banking system against the fintech. So yes, there are fintechs, I won't mention name, but there are fintechs that are not playing the game well. Okay. Yes, so they are born to, and it's the law of development. You know, when there is a mass uprising, not necessarily people rising up, mass uprising in any industry, you see, the ones that are not strong enough, that are not playing the game well, they follow the track, while those who are playing the game well will even become more entrenched.
Mr. Daniel, what lesson do you think the legacy banks that you've been talking about, what lesson do you think they can learn from all of these? And the fintechs themselves as well, like some that Mr. Benjamin talked about, that if they're not doing it the right way, they might fall by the wayside. What lesson do you think some of these fintechs can also learn so they won't now find themselves in a situation of...
We are in a tech-savvy environment. Nigeria as a nation is tech savvy. We have over 60% of our population being watered with youth.
Even though we are still far behind if you want to make comparison with other clients.
Of course. So in that regard, I believe the traditional banks just have to evolve when it comes to their internal workings. You know, while we talk about physical infrastructure for the traditional banks, we're talking about digital infrastructure, wherein everything they do, even within the Fintech space, is being deployed from the cloud. You know, they deploy resources, the API tools being used are just you can even do it from just a small location and all that.
Mr. Daniel, what you are saying now, you are saying this now, even when you and I know that a lot of those who call our friends, who have the knowledge, who have the wherewithal, in terms of the capacity to manipulate stuffs online.
That is where the part
they are living
that is where the part of financial literacy comes to play. You know, even as populated as we are as a nation, we really don't have much financial education when it comes to processing and remittance and activities that has to do with the operations of payments. And so I believe the traditional banking system has, you know, that's why I said earlier that there are a lot of things that the fintech companies have to learn from the traditional banks. And there are things that the traditional banks have to learn from the fintechs. For example, when it comes to customer, you know, relations, user-friendly operations and all that, I think we can see the fintech company giving out its best. But then when you're talking about identity management, when you talk about compliance, and when you talk about cyber security, I don't think even the fintechs have it better than the traditional banks.
Yes,
yes.
With some of the experience we've had
of course, they've been in the game. They've been in the game. Talking about regulators, the traditional banks have been dealing with the regulators for a long time compared to the fintech startups. True. So they have much of the experience when it comes to this area. If, for example, I'm trying to open an account with a digital bank, I practically do not have to go to the person's house to find out, oh, is this where the person is living? So I think there's need for an evolution when it comes to KYC verification, both from the fintech organizations and also from for that of learning from that of the banking institution.
Okay, I think we are going to leave it there so we can quickly delve into, I mean, because you just brought us there now. You made mention of KYC verification, and then Google came up with a new policy. I think last weekend that policy came on board, and then it was about restricting loan apps, right, from gaining access to their customers' photos and basically a major part of their identity.
That's quite embarrassing.
How embarrassing?
It's embarrassing because, come on, we are living in a civilized society and we all have rights to our privacy. I don't see any reason why an institution should give me access to funding and then with the intentions to embarrass me at the end of the day because you are setting a system that you know that I can't meet up to its demands. So the Google...
I'm sure you were supposed to read through the terms and conditions, right?
Of course. So for me, it's a welcome development.
Okay.
It's long expected that such a policy should be made available to restrict these harassments on Nigerians. Because we know the hardship we're facing as far as the economy is concerned. And when you have an opportunity to access funding from, you know, everybody will just jump into it.
True.
And so only for you to have access, I could vividly recall the number of times I received threatening messages from loan apps concerning friends that I should warn my friends to pay up their loan, telling me the exact amount. Come on, that's embarrassing. It's not needed in a sane society like this. And so for me, it's a welcome policy. Okay. And I believe there should be a consolidation on that policy as well, as it goes across other non-banking apps too. Very important.
Mr. Benjamin, I'm sure you also share the same line of thought as to the policy as put forward by Google, by the way, to take effect from May 31. Yeah. And now he talked about the fact that he shared his own experience as to how he has also gotten calls from some of these loan apps, you know, calling on behalf of his friends that have, you know, borrowed money from them. But then if you have a loan app that you operate, you are in charge, how do you now get your money back from the person that has borrowed money from your organization, the loan app?
Okay, fine. This takes us to the question we talked about, apps or institutions that are not well-footed will fall off. The ones that are...
The topics are intertwined.
Yes. You see, it is primitive. It is criminal to violate another person's privacy. Okay. So I really do not think, you know, the first experience I had, like he shared, is I was wondering who came up with these ideas, because it doesn't really make any sense. But then I'm very careful of being critical in criticizing them, because you must also understand that they are looking at the possibility of solving a problem for the mass of Nigerian people, which has to do with making credit available to them. But then they need to, that was why I also talked about they need to subject themselves to regulatory processes. Okay. And also the same period, I know, I read the federal government also gave access to about more than 113 bank app loans.
Yes.
So what that suggests is that the government is not interested, or is not interested in killing that industry.
Yes.
But the government just want them to be more responsible in discharging their duty. So if you have to, I know part of their policy is, you know, no collateral, just make it easy, just open an app, and that's what makes them distinct to the legacy banking system where you take money. But then I believe there should be some level of agreement between the lender and the borrower, and that agreement should be enforceable. Okay. So if there is any default, the app should have the legitimacy to take up seek a legal redress from whosoever must have borrowed money from. And also they should also ensure that the percentage you are giving to people is also still fair, because it's a question of on reasonable processes. Yes, it is always like that for any innovation in its infancy. It's still in the infancy, and I understand, and I also believe that there is a room for them to grow. But then, instead of harassing other people, violating people's privacy, you should have an agreement with whoever you've given money to, and that agreement should be enforceable by law. I think that will solve the problem of
I think to add to that, this is the reason why I talked about learning from the legacy banking system. Yeah. They've been in the business of giving out loans. They understand how the operations works. So you come in with a very good innovation, no collateral, but then you should find what's the missing link, wherein you can be able to give out this and find these people. You know, in Nigeria, naturally, if I even borrow you money now, it's difficult for you to even pay back. And I'm seeing you every day.
Why should you want to borrow me the money?
So, and I'm seeing you every day.
Yeah.
Not to talk about you just getting something from an app, you don't even know the
money just appears in your account.
The money appears in your account and you can access it. So there has to be a system, a kind of a policy that. That's why I talked about much more a better KYC verification system, wherein you can have, okay, this is a document you must have to be able to assess this loan, so that with that document you can be able to, hold the person liable when they don't meet to the demands, not necessarily harassing them with their families and friends about their privacy with regards to borrowing money from your organization and all that. So I think it's the policy is a welcome development, and I believe these new digital organizations should learn from the legacy system. Yes, it's more like a modernization of the legacy banking system, but there is much that is needed to be done to make it perfect.
Well, I'm tempted to ask you something. I don't know if you can quickly deliver it just in a few seconds, because some experts actually believe that this policy, when Google announced this new policy, it didn't take too long before the government came out to say, oh, welcome development, just like you said now, and they supported it, and then everything is, well welcomed and embraced. But then some believe that this policy is in place to favor the legacy banking system and to put the fintechs in a disadvantaged position.
Of course, we understand that sometimes we can have policies that affect, make or mar progress or development. But for me, critically looking at everything, and with the incessant harassment of Nigerians with regards to this is not just within the Nigeria sphere. It has been in other Asia countries as well. But for me, I believe the finance angle of the government looking critically into these policies and giving a nod to it is something I also agree with. It's not on the part of which haunting anyone, because even part of those who are policy makers in this particular framework are also investors in these digital banks and all that. So it's a welcome development.
Well, you just 2 lines. I mean, if you can help.
Okay. The point is, regulation, yes, is normal for those in the app loan industry to come up with such assumption. But the reality remains that if you are not making a violation, then there will be no need for such policy to be propounded. So make sure you resolve that, make sure you solve that problem, so you don't have to, in the process of trying to help people, you're also committing a great atrocity.
Well, even if the policy is propounded, as long as you are doing the right thing, it won't affect you.
Of course.
Yes,
of course.
Just do what is right. Thank you so much, Mr. Daniel Nwabuma. Yes, educationist and financial commentator. We appreciate your time. And then, of course, Mr. Benjamin Majekodumi. We appreciate you.
Thank you for
joining us on the program, Business This Week. We'll be back again next week, Friday, for another talking point as far as business is concerned. My name is Dennis Ofik. I'm out of here. See you next week.